Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news of grim tales everywhere and no rebound in oil prices. Bond markets are worried. But first up today, there was another dairy auction overnight, and it was a wobbly one. Overall prices were 4.2% lower in US dollar terms and 3.8% lower in New Zealand dollar terms. Most products took falls at these levels, with whole milk powder prices down 3.9% and skim milk powder down 4.9%. This adds to a string of chunky falls since the beginning of February, with only one auction in the past 6 able to hold the line. These falls are mounting, so since the start of 2020, overall prices are down 11%, and year on year they're down 17%. The growing retreat won't be able to be ignored in the farm gate milk price. Wall Street is sinking today, with the S&P 500 down 2.8% so far. Overnight, European markets fell harder, down more than 3%, and yesterday it was red ink all the way in Asian markets and in Australia and New Zealand. In the US, prior to the real bite of the pandemic, March data for American home sales dropped by the most in almost 5 years. They tumbled almost 9% from February, back to levels of a year ago and snuffing out their interim recovery. It will get worse, of course, because April was at a virtual standstill, and both realtors and economists expect a further deterioration in housing market activity through the second quarter. And thousands of small trucking companies that move the vast majority of goods in the American freight markets face a grim future, with suddenly shrinking cash flows, limited reserves and uncertain access to credit. They mirror the prospects of most American SMEs, as their vaunted bailout funds look like they've been raided by large businesses first. In China, their tax revenues fell 21% in February in the heart of their pandemic outbreak, and then they fell 26% in March when they were supposed to be recovering. Further, profits in their large SOE companies fell 60% in the first quarter of 2020. China's taken a severe economic hit. Despite that, and fanning scepticism of their official data, they say that their jobless rate is only 3.7%. In Australia, they're rolling out some very big guns to try and save the Virgin airline, but it doesn't look positive. Also not positive is the outlook for their landlords, including the residential landlords. A flood of properties onto their residential markets from Airbnb is a key factor. The US Treasury 10-year yield is falling, now down 7 basis points to be just at 0.57% and nearing its all-time spike lower on March the 9th. And gold is lower today, down $15 to $1,678 an ounce. And oil prices have stayed very low, especially US crude prices. They're currently at just on $9 a barrel, and while that's a rise from yesterday's collapse, it is still at a level the industry can't survive at. Now, international oil prices are falling too, and even faster, with the Brent benchmark down $8 to $18 a barrel and a 30% drop in one day. That's now at a level below almost every country's cost of production. And the Kiwi dollar will start today weaker. We're now at 59.7 US cents and a full 1 cent lower than this time yesterday. On the cross rates, we're a quarter cent lower at 94.9 Australian cents, and against the euro, we're almost 1 cent lower at 54.9 euro cents. That takes our trade-weighted index back to just on 66 and below its 4-week rolling average. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.